Hello, traders. Gary Wagner with the Silver Forecast here. Approximately noon here in Honolulu, Hawaii, the first day of April, Friday, and this is the Daily Report, our weekend review. Silver has closed higher today, up about 16 cents, 37.83, 37.85 bid-ask spread off of the Forex. We are looking at a daily chart in Henkin or Japanese average format. We have seen this market climb pretty much straight up. It did hit a band of what I will call congestion, but I'm going to talk to you about what I believe that will produce towards the end of the broadcast. And as you can see, after making this new high earlier in the week, we saw this market really consolidate, and very, very similar to gold, what we saw it do was form a base. In this case, the base is just above $36 per ounce. It's roughly 36.20, 36.30, but you can see this base right in here. Now, in terms of our Henkin candles on the daily chart, we did have that correction. When we saw the correction, you could see that as these candles here went from green to red. You could also see the fact that as we moved up, these body sizes really shrunk, especially this one, and that was really that changing point. Now, since then, over the last couple of trading days, as you can clearly see, this marketplace has gone back to the upside. And in terms of resistance, well, obviously our resistance is still sitting up above $38 per ounce, and that's based on this high that we got earlier this week when we exceeded a 31-year high. But I think that what we are forming right now in terms of the marketplace itself is a basic pennant or consolidation formation. And this is the way that I look at it. If we basically go from our lows to our lows and draw that up, and then from our highs to our highs and draw that down, you get your basic pennant formation, or what Elliott wave theorists and R.N. Elliott coined as a horizontal triangle. Typically, on a horizontal triangle, the range will narrow, the energy will compress. As the market trades and that range narrows, as it approaches the apex, the pinnacle, in other words, as it approaches this particular point, the end of this triangle, that market typically has built all of this energy up and it's going to break. In most cases, the market will break in the prominent direction of the trend. The prominent direction of the trend, of course, is absolutely up. For that reason, my belief right now is that this market is probably due for a sizable breakout to the upside. Now, how does that fit in with our overall picture? And to do that, I really want to take a look at this Elliott wave channel line that we've been working with for the last couple of weeks, actually since we started the silver forecast. You know, we talked about this yesterday. We made our first stab at this upper level trend channel. It could not sustain it. Market comes up, market comes down, and of course, as you can see right in here, it very, very eloquently holds that support line. We then get our second run up, and as that market ran up, you can see, again, it broke through that channel line, but on a closing basis, it was unable to. So what did we see? We saw consolidation in the market. This is another way of looking at that pennant formation right in here. And as you can see, in terms of where the marketplace closed itself, very, very close to the upper channel. My sentiment is, just as we saw in the other chart, that apex is going to occur, I believe, right along this channel line. And when it does, if we get that breakout to the upside, this channel line will become null and void. We will have to look at our next level, because I think that if in fact it breaks out to the upside, it needs to break over this channel line. And of course, classic candlestick chart itself, this is our daily. What I want to do is, as we have finally gotten to the end of the week, take a look at our weekly chart. And as you can see in our weekly chart, this market is absolutely been on a tear. There's no doubt about it. We have a lower tail here. It would have to be about twice the length for it to be considered a hammer or a hangman. It's not, but it is a small-bodied candle. Again, my sentiment is when we take a look at this market, whenever the market consolidates, you get a series. This is weekly, of course. You get these consolidation patterns where this range really, really narrows for a little bit, and then you get your breakout. Then you get your breakout. In this case, you got a small breakout here, but then it corrected and went to the bottom. Once again, if we take a look at this area here, we got our breakout. And once again, I think that this market can be characterized, the best way to characterize it is that we have a series of aggressive rallies to the upside, followed by periods of consolidation. The consolidation aren't even necessarily strong corrections. We have fundamental scenarios which I believe will continue to push this market higher. Traders, maintain our long position. That's quite obvious. Maintain our stops. We'll talk to you on Monday for another daily report. Have a great weekend. Bye-bye.